Hello and welcome to Crux Investor. We got earlier today Greg Hall. He's the CEO of Alligator Energy, ASX listed uranium junior. We talked to him about their current share structure, the acquisition of Samphire, how to manage a junior exploration program with limited budget and constraints associated with that. We talked to him about the Outlier project of green energy in Italy. And if you want our thoughts and opinions on the conversation, those topics, the company and Greg himself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities, including our weekly uranium show, now in its 51st week. And some great insights in there, actually. Plus training courses to help you with your diligence process. We've got summaries of all the interviews that we've done, just to save you some time, because we know you're busy. Most importantly, there is a thriving community of investors and looking to share their thoughts and ideas with each other in a nice, friendly and safe environment, which you might enjoy. It's free from judgment, trolling and abuse. Sound nice? I hope it does. Join them at cruxinvestor.com/club. We love your feedback too. So give us a like if you appreciate it. If your thoughts below, get back to everyone. And if you want to see precisely what we talked to Greg about today, do take a look in the description below. Greg, good morning. How are you, sir?
I am fine. Good afternoon to you.
Oh, yes. So
Right.
I'm assuming you're in Australia.
I'm in Adelaide, yes, and enjoying the latter part of summer. But I like the cold. My preference is the cold after too many years in the outback, so I'm waiting for the winter.
Ah, fantastic. Okay, well, and how's life down in Adelaide?
Well, it's been good. Certainly, there's less COVID restriction, and so therefore there's been events. The Adelaide Fringe, which is second only to Edinburgh, has been massive, so it's been a lot of fun. So we're just getting over that mad March time.
Oh, so you could have got a big swathe of comics from around the world descend on Adelaide.
Oh, well, there was limited ones from overseas. There was a lot of Australia this time.
Right.
And normally, we get a lot of international comedians come to Adelaide for the Adelaide Fringe from roughly mid-February, mid-March. It's a month-long festival. So
wow.
It's quite a lot of fun.
I didn't know that was a thing.
A little bit of drinking involved with it too.
I approve of both of those activities. Fantastic. Hey, well, Greg, thanks for joining us. We've not spoken before, not heard the story, so looking forward to it. Can you kick us off with a 1-minute overview of the company? I'll pick it up from there.
Sure. Okay. So Alligator Energy is around an 11-year-old company, a highly experienced team evaluating the Alligator Rivers uranium prospects for a number of years. And then we changed our strategy in 2018 to start to branch into South Australia with potential ISR projects. We've acquired a nearly 50 million pound resource at the Samphire project, discovered in 2007 but not developed. And we have some additional exploration properties in northern Italy, in Piemonte, which is nickel and cobalt copper potential. So that's a key summary. We have a very experienced board and advisory team of experienced uranium people and taking advantage of that to advance, how shall we say, some growth opportunities. Okay,
so what are we buying into? Because obviously uranium has been through a difficult few years. You've been at this 11 years, so you've been, the timing, when you started this thing, was the timing right?
Well, I came on the board about 5 years ago, but the initial board listed and raised money late 2010, about 6 months prior to the Japanese tsunami. So it was a late raising, but totally focused around the opportunity of high grade in the Alligator Rivers range area, looking for the Ranger Jabiluka style ore body. So naturally they did initial amount of work, kept the geology going, kept the investigations, in some fantastic R&D, looking at deeper areas of geology, such as Cameco are doing in the same area. And having some very advanced targets, but became more and more difficult in a suppressed uranium market to explore in that locality. So yes, it was unfortunate timing. However, it gave an opportunity to get well-founded in terms of the Alligator Rivers area. So if you really want to find a 30, 40-year life mine in Australia for uranium, that's one of the places to go. And I would argue that the second place to go is probably South Australia.
And how's the different states have different attitudes towards uranium production,
sure.
Right? So Northern Territories, Southern Australia, what's the reaction been there? Are you experiencing any issues?
Both of those states are the only two that have maintained a constant approach of positive approvals, environmental legislation, and bipartisan support for uranium mining right through the last 20, 30 years or more. Both of them have had operating uranium mines for 40 years.
Right, and what's their expectation of the process that you've got to go through to get this into, well, like, I know your exploration or near-term development, but what's their expectations from you? What do you need to do for them?
Well let's look, in terms of Alligator Rivers, we don't have it. We have a very small resource. We don't have a significant resource. So that's not even on a development path yet. The Samphire project in South Australia would have a 3 to 4 year environmental baseline and approval process, scoping study, then the feasibility, and then all of that. So the time frame we've got is something like that 3 to 4 year process. So an early stage developer with a broad uranium exploration base.
Okay. I'll come back to that in a second because I'm keen to work out your priorities, your order of play, as it were. But let's start with the team. So relevant experience in terms of building uranium businesses is what?
Okay, so my background as a mining engineer, I was one of the first mining engineers on the Olympic Dam project, built up to mining manager prior to departure. Spent some time in iron ore in Sweden, came back to the nickel business, managing nickel mines for Western Mining Corporation. Then left there to run the Ranger uranium mine for 4 years, along with the Jabiluka test work that we were doing. Then moved into uranium marketing with ERA Rio Tinto. So my background has got a long-standing stay in uranium, and then launched Toro Energy Limited in 2006 at the stage of the last uranium pickup, which achieved the first fully approved uranium mine in Western Australia. So that background is there. On our board is Peter McIntyre, who was the managing director of Extract Resources, which found the Husab deposit in Namibia, which was subsequently sold to ZNGP, the Chinese group. And both Peter and his director, John Main, who's an experienced explorer, came into Alligator because they liked the opportunity of Arnhem Land, large, high-grade deposits. So they're still strong supporters. Peter's on the board, and he has a broad experience of both uranium development and other mine operations. We have an advisory group which comprises consultants, Inception consultant engineers here in Adelaide, who have the only broad range ISR experiences in Australia. So all of them have worked at either the Beverley or Honeymoon mines or 4 Mile, or worked overseas on ISR projects. So they were involved with them in evaluating our Samphire project and other opportunities. We have an advisory board with a very experienced 45-year plus geologist who's been involved in the discovery of the Ranger project many years ago, and also worked with NextGen on their discovery. So we along with that, we have access to specific consultants in the US that we use for advice on potential properties over there. We haven't acquired anything as of yet. And we have an experienced geologist who's got a range of experience through calcrete deposits, Arnhem Land, and some African deposits. So we've got an eclectic mix of skill sets in the uranium space. What we do know, as many companies do, is where to acquire good experience, and I'm a believer in building up new experience. So we have young geos we're training up, and we certainly will plan to keep engaging new people and bringing them into the industry.
Okay, so that's quite the resume or CV that the team have on the uranium side. What about in terms of junior company experience? Because obviously, I know you came in 5 years ago, and the company's been around a long time. A lot of shares out, not a lot of cash around. How are you finding working in that kind of environment? Because obviously, when you look at the Samphire acquisition, there's going to be a few shares issued there as well, and that just puts a little bit of constraint on the way that you can operate that, and how you go out and raise money, the cost of that money, etc. Especially at this market cap.
Look, most certainly, Alligator's come from a low base. So while it had a good capital base and cash injections in the early part of its life, it went through the doldrums of being a pure uranium explorer with no resources. And that's a tough gig in the downtime. So the reason for the change in strategy was to try and overcome that, come out of that. So acquiring the Samphire resource, which was in an unlisted but public company, at the very opportune time of 2019 and in 20, prior to the most recent market pickup, was valuable. We're probably worth 3 times that now. And you've seen that in our recent share market movement since we acquired that asset. So the aim was raise money and go out and find, or the target was raise money and go out and find a resource or acquire a resource. And we ascertained in the board, let's find some opportunities to acquire. Now, that has meant that over the time, with various raisings, we've got lots of shares out there. The logical thing would be on the back of a significant undertaking, whether it's a significant discovery or a good acquisition, you would do a roll-up or a consolidation. You don't do that without a good reason, because you just drop share value, market cap value if you do. So we'll correct that in balance in due course, but it's got to be around a good undertaking.
So you just said that the acquisition was the catalyst for the movement in the share price. I think most of the uranium players, the junior end, have seen doubling or trebling of share price over the last 4 months. But that was the market doing the heavy lifting.
No, I agree with you. Yeah.
Right?
Yeah. No, I agree with you. It was predominantly from about the 4th of December when the policy started coming out of the US and all that. No, that was the catalyst for it. But if we didn't have a uranium resource on the books then, we would not have had the same traction. So getting that resource prior to that time period was really the key thing for us.
Got it. Okay.
Now, we didn't know it was going to happen. It was about getting the resource on the books and a potentially developable resource because it's ISR within South Australia. So that's what's attractive.
Right. Okay. That's interesting. Okay. So as with all things investing, sometimes it's about timing. So that was great.
Yeah, a bit of luck.
bit of luck. Yeah. Okay. So let me deal with the Outlier, which is Italy. You've got. Okay, I think you kind of set it up as a subsidiary with its own team and its own board within the company. So, how much value are you attributing to that? First of all, given today's market cap.
Well, look, we have a joint venture with a regional private group that put the first package of these together. We've then expanded the 10-week package after we did the initial work. We have an Australian subsidiary owning an Italian subsidiary fully owned. It's an historical mines area where the last time these mines were run was in World War II. So these are adits and narrow vein mines in the hillsides on plateaus, etc. But it's a 30-kilometre area of the crust, where the Earth's crust, the African crust, is coming up. And it's got 17 occurrences of greater than 0.5% nickel. Now, we had a global nickel expert have a look at this, and he said, look, the only areas that got this sort of display of nickel have become major fields. So it's got potential. Not one drill hole into it. Very early geophysics in 2015, that's it. So it's a very early stage play. And we acquired it, or we farmed into it on the basis of uranium being in the doldrums in 2017 and 18. Energy minerals were becoming of interest, so it was an opportunity. And we now have it set up with the expanding European interest in nickel, cobalt, copper, and those directly homegrown strategic minerals. We now have a couple of strategic parties interested and having a look to potentially take it forward with us. So it's set up for that separate operational business at the right time. We have key experienced players in Italy that we engage with to work the project, as well as our juniors if we need.
Right, but you're setting it up to what? Spin it out or sell it off, or what?
Well, it's got that opportunity. So we certainly set it up so that it could attract investor interest coming in like that, and it is set up so it could be spun off into, for example, an AIM-listed or Canadian-listed unit, or it could be retained while we expand the potential, especially at depth, with some more modern geophysics, and that's probably our first step, is to have a look at some funded geophysics. So it's likely to be an opportunity for us to create some value for shareholders like that, rather than us raising funds and putting into it in an earnest way. So that's being upfront, and we've been quite clear to say that publicly. It's set up for potential investment by interested parties into these minerals.
Right, some sort of farm-out situation. So it's not going to distract you from your core objective, which is the uranium in Australia.
No. While we really want to gain value out of it, we're a uranium-focused development and exploration group now.
Okay, so I guess as and when you know something or you make some decisions, you'll let the shareholders and the market know about what's happening in Italy. Okay, great. Let's get back to Australia. So we talked about Alligator. It's much earlier stage. So are you spending time, money and effort on that now, or are you getting into the Samphire project? What's the priority?
The Samphire project is our first priority because Alligator Rivers region exploration really you can only explore during the dry season, which is from about May to November. It requires a lot of exploration dollars. Cameco found that out through their exploration up there in years gone by. Vimy now have the Cameco ground and they found that out. So it really is an area that you need to raise a good amount of funds, between 2 to 5 million, to really do good, solid exploration on our key targets. Now, we've got fantastic geological understanding of Alligator Rivers, but the Ranger 3 ore body, which I helped to mine, is 80 metres wide. So you're looking 400 metres deep, under sandstone, very little signature, trying to find the confluence where you get a series of fluids come up structures from basement and form an 80 metre wide ore body of enough grade and size for a 30-year mine. It takes work, and it's seasonal. We've got great relationships there. We've had more than 35 Indigenous employees over the years, but it's going to require a very buoyant market to be able to fund adequate exploration. Meanwhile, our focus is on Samphire. So after the acquisition, we did an initial desktop study with our consulting engineers and others, and evaluated that this year what we need to do is to test for some higher grade zones, because there is some high grade there, 0.3% over very good meters and things. But test for some additional higher grade zones, get some geophysics done, which we're doing now, start some drilling for both the higher grade extensional work, get some additional new core samples for the latest resin extraction testing, similar to what POS Resources have done, and then update both the resource and scoping study. And we're funded to do that work this year, and that will tell us what's the right development prospectivity and profile for this project.
Just coming back to my point earlier about working within a sort of smaller company and all the restrictions that brings or can bring. How did you pay for the Samphire project? Was it cash, shares? What were the terms?
We paid shares. So we diluted our shareholders substantially. It did cost about a third of the company to pick it up, but it was a £50 million resource. So quite a reasonable resource with a very good, cut-off grade table. So there's a good high-grade core in this, which is quite genuine. And that's what we had to make sure of before we were willing to spend the shareholders' shares.
Right. So that's a good asset. You like the asset. Talk to me about what were the terms in terms, what was the price of the shares that were issued?
Well, our share price at the time was around 0.7 cents. We did the deal at 0.6. We brought on these shareholders that held Samphire in an unlisted public company hadn't been able to trade for 4 years, so there was a willingness to do the deal. Yes, we did dilute our shareholders. They ended up with 2/3 and new shareholders 1/3. But it created an entity with a broad experience base, good exploration properties, and now a £50 million resource in an ISR setting, which had already some good proven metallurgical and other requirements. So we thought it was the right decision to take. Time has proven it's reasonably correct because the market has since recognised it.
But do you think there's an overhang there with the shares? Are you going to start seeing more people offloading? I mean, is that a concern? Are you able to help maybe mop some of those up, put them into the right hands? How do you manage all of that?
Yeah, look, we have considered that. The top 200 shareholders of the company own 72%. Okay, and we've got nearly 4,000 shareholders. So there is a lot of small retail overhang. However, you need to do those sorts of transactions or corporate changes on the basis of significant value-adding impetus, whether it's here's drilling we're starting up, here's some initial results, here's this, here's a potential acquisition, here's some work we're doing on, say, a big lake uranium prospect and finding this. So, in other words, if you just go out and consolidate or change your structure and mop up shares, you'll probably lose 10% value. So you can make the decision to do that to get set for the future, or do it on the back of a substantial new value news. So we've yet to make that decision, but at the moment we know roughly what we have to do. It's a matter of timing of when you might do it and around what news flow.
Okay, it's interesting because when you talked earlier about roll-ups and etc., there's a kind of bit of work that you got to do in terms of the capital structure and the share register, I guess, at some point. But so, what is that some point? What do you think that moment is? Not necessarily in timing, but in terms of the event.
Well, it could be threefold, I think. It could be some significant advance work on Samphire, which finds new high-grade zones of good resource extension or really good metallurgical test results, which we'll work through. It could be our very greenfields area, Big Lake Uranium project in the Cooper Basin, which we haven't talked about yet, but we'll later, which is a brand new greenfield site having a look at a very large hydrocarbon basin, where most of the world's ISR and uranium deposits are linked with hydrocarbon basins. Or it could be a further growth opportunity, like a farming and acquisition of additional property or resource. And we really are focused on evaluating some additional uranium resource opportunities, as everyone is, and everyone I've listened to on your shows is. It's got to make sense, but those could be the three catalysts.
Okay. So let's talk about the project. So you've got Alligator. So in terms of time and money, you've said you need a lot of money to kind of get that going. You've explained that. So in terms of money, are you allocating anything to that?
We've just had a new area of tenements, 11 tenements granted there, Nabarlek North, to the north of the old Nabarlek uranium mine. We have an allowance for around an initial $150,000 worth of work for targeting up there.
Okay.
And that money we've got to set aside for this year. So when capital raising last year, so we've got that set aside. That'll help to identify some targets and maintain our work ethic there, maintain our indigenous relationships, do some work on the ground. So we've got that planned in the budget. But that's really all. It's about, we've got a huge asset base of knowledge, a great field of potential. Let's see when the right time is to do it. Right.
So what I'm intrigued by and interested by is how management teams sort of plan and navigate their way through, budgetary constraints and prioritizing projects. So the 150, is that an obligation, or is that something that you said, no, we need to do this just to go?
No, it's not. Our obligation up there in terms of holding the assets is probably in the region of 40 to 50,000. So it's more than that.
Okay, so let's come down to Samphire. Okay, so let's talk about Samphire then. So how much cash have you got today? Let's start with that.
About 2 million.
2 million, okay. And so how much of that is going into Samphire to kind of move that forward? Because it's obviously you're quite pleased with what you've got there.
Well, look, when we raised in December, we outlined a program of around 800,000 to 1 million to go into Samphire this year, with the geophysics, the drilling, and the ANSTO metallurgical testing, and an updated scoping study on the back of that. Right,
and the other thing we've seen in the market happening is, well, apart from people raising capital going buy pounds, but they've also been going to market because they can to raise capital, because we've seen this little surge, this little movement here. Are you going to do that, or is this 2 million that you've got enough?
Well, it's good to evaluate the opportunity to raise capital when you don't have to. So certainly a board and a small company like ours is always evaluating the opportunities. And in the current climate, because we're a small company but with a significant resource, we are being approached by groups all the time saying, do you want it, do you want it, do you want it? Now, it's got to be around the right framework and the right impetus for us. We are now on the ground doing geophysics at Samphire. We'll be commencing drilling in July, and we've told the market that. And I think there'll be some impetus for us to evaluate that at the right time.
Okay. It would help, that, wouldn't it? You could move things forward a little bit faster if you did do that.
Most certainly, and I think it's just around the news flow that we can generate for them at the right time. So the buoyancy is there in the market. There is support for dollars, so we'll evaluate it at the right time.
The other thing you've got to do is work out the timing. Where do you guys fit in the scheme of things? What can Samphire do for you in the context of I think it's general acceptance that there are new investors coming into the uranium space looking at it, generalist funds We've seen what's happened with some of the ETFs. We've seen a lot of these generalist retail investors looking at the space too. So how do you work out how you navigate the way forward? Because, people talk about hitting the cycle right, or at least being able to tell a story of when you're going to come into market or when you're going to be relevant. So what's your approach to it?
Yeah. Well, that's so the study work, the initial desktop study work we put out in December, which we couldn't do any forward-looking statements because the resources all inferred. It needs to be indicated, which is our work we're doing this year. So that showed us, though, that there is a potential project there with pretty similar economics to other ISR projects in Australia. So we're aware of that. We believe we need a slightly bigger resource. We have an additional resource, the Plumbush one, which is non-JORC. It's JORC 2004, in fact, not JORC 2012. So that's upside. We know there's additional potential channels, extensions that we can look at. So we need to do the work this year, which will improve or give us more information about that economics. Now, provided that comes off and the additional test work we do on the metallurgical testing proves what we believe it will do, we've probably got a staged project where we can say, right, now we're heading towards a pre-feas or feasibility. If we know there's only one path, feasibility, we start baseline monitoring, we start the approval process. Now, I'm a big believer that it doesn't matter the economics of a uranium mine, you have to have approval. So
you have to have what? I didn't quite catch that. You have to have what?
You have to have approvals.
Approvals, yes.
You have to have project approvals to proceed. So I like to tell an old story about the Rossing uranium mine and Jabiluka uranium mine, which were both coming to market for approvals about the same time in late 79. Rossing had an average grade of 0.05, 0.06%. Got approval, Namibian government supported, bang, went forward. Jabiluka at a grade of 0.5, 10 times the grade, missed the window of opportunity with the previous Liberal government, didn't get approved, never went ahead. Sometimes approvals are what you need. So I'm a believer in making sure you start early work on approval. So even now, at our very early evaluation stage, I'm meeting up in Whyalla, near our project, with local councils, Indigenous groups, with all of the people we need to engage with to get that very early stage process underway. So we'll work on that very, very early, even before we're sure of the economics.
Okay, no, I understand that, and I agree with that. That's good. That's good news. But in terms of this project, how do you kind of piece all those elements together with a budget which is constrained? Right, I think that's fair to say. Because I read, reading through your marketing material, you talk about direct and strategic partner investment model. Do you think, given the sort of history of how long this company's been on the go and the amount of shares on issue, and obviously the market didn't kind of go with you with regards to 2011 in terms of timing, but do you think you're going to have to fall back onto trying to find? And I guess it's going to hurt because you've got a good project there, getting a strategic partner to come in, just to sort of make sure you're not continuing to dilute your current shareholders.
Well, it depends on the market support you have from the buoyancy in the current approach. If we're funded to add the value to the project now for this year, which will add value to start to show the direction, all right? And therefore, that will tell us where we can take this project forward. I think that will add value to the project and to the company, and we can make the choice then of raising through equity and taking that forward step by step, because you don't have to do it all at once. You can get the value up for the early stage project it is, commence these other options, and as you advance that, especially as people start to realise that the South Australian government is one of the few in Australia that have very well-proven approval processes for uranium. They've done it 4 times. Okay, so I think we'll be able to add the value that will support the shareholders and support adding capital when needed. Strategically, we would bring partners into our other 2 key projects, such as Alligator Rivers and Italy, before we would do Samphire, because Samphire is a nice size project for a company like ours as we grow.
Okay, so it's all relevant. Is what you're saying. You've picked up Samphire actually at a good price.
I don't want to say that too much because we have Samphire shareholders on our register now, but they, if they've chosen to stay with Alligator, I want to add more value for them because we certainly believe we gave them good value when we picked up the project. The market has since, and it's obviously you've talked to other people with your own experience, and it's a strange market situation. You've got equity buoyancy, you've got policy change in the US largely driving that. Yes, the inventory's gone from the spot market and it's been driven by additional excess spot capacity, but you're not seeing a big spot price increase. You're not seeing RFPs yet, etc. So it's an early stage buoyancy. Let's see where it goes.
We'll talk about that in a second, actually. Okay, so just with regards to Samphire, because I think that's obviously this is the key. That's the key that's going to unlock value if you get it right. Okay, so you've got $2 million. You may or may not choose to raise some money, depending on what you need to do. You've started an approvals process. What's the moment that you're working towards? You say, if we can get to here, I think in the context of what we're seeing out in the market, people will take notice. We will become relevant.
I think by the end of this year, if we have an upgraded resource, which moves us into the indicated category to a reasonable amount, along with an updated scoping study, which will then have the forward statements and finances we can announce. That's a key point for us at the end of this year. And that will also tell us what is the price you need to do contracts for that would support this operation going forward. That'll be an important point. That's towards the end of this year.
So you'll start to understand the economics at that point.
Well, we understand them already, but we can't announce them already. We're now enhancing our understanding of them. By everything we're doing this year is improving that obviously confidential desktop study we did, which we couldn't announce the forward statements for. But we did make the statement clearly in our release in December that it's in line with similar and similar costs from similar ISR operations in South Australia. Right? So we're comfortable that it's got those basic economics, but you can get plenty of variation in economics. So we need to enhance it.
So $50-$60.
Well, you would know that essentially, let's talk US dollars, right? That essentially the sort of operating costs for ISR, operating costs for ISR, including wellfield, is around that $30 a pound mark. All-in sustaining cost is probably $40 per pound by the time you do other things, okay? So to really generate a kick-off, remembering it's not a high capital cost, these plants, to generate a kick-off, you're going to have to be at a $50 price up.
Yeah, I think that's what we're hearing from most ISR. US dollars, everyone. Yeah, US dollars.
And,
yeah.
And if you want to have a very low risk kick-off, we try to get more than that. So, for example, during the Toro work, we had a calculated hosted deposit. We did a huge amount of work off, and that really needed a 60 to 65 price. And I've heard other calculated mine owners know that is the sort of price you need. So there's just more difficult extraction for calculated type. But nonetheless, there's room for both. Look, a key reason for us developing a strategy as a board in 2018 and coming to both South Australia and ISR potential is this. Good, solid mines established 30, 40 years ago, kept running for 30, 40 years, such as Ranger, such as Rossing. Not always high grade, but nonetheless, the better the grade, the better. But the other mines which have been established and run have become more than 50 to 60% of the world's global production are ISR. So there's a logical thing in having good potential high-grade discovery, which could be a boomer, and good solid ISR production potential. So that's our key strategy.
Okay, I think that's great on the company. So we will await from you those things. That's great. Talk to me about your thoughts about the market. You're seeing people raising money to buy pounds. Does it in all instances make sense?
I think it does for companies in different ways, depending on the status of where they are. If you've got, look, as someone who's got in front of many utilities in the past through my marketing days, if you've got a new project about to start, let's say in 1 or 2 years, and you've got some backup pounds either directly held or with a relationship with a provider that you could back up a ramp up, utilities love it. They want security of supply of production. but a new starting company has always got some risk. So therefore, a backup of pound supply for a new start is ideal. The second reason you might do it is because you're offering your shareholders something other than cash. You're offering a hedge on the uranium price when a lot of the market's saying the uranium price over the next 3 to 5 years has logically got to go higher because of the need for restart of production and some new production. So therefore, we know that the restarts will require higher contract prices, which should move the spot up. So actually, if you need cash for the work over the next 1 to 2 years, actually buying pounds is not a bad way to get the cash and have the cash available. So they would be, to me, two key reasons why you would do it. It's a sensible proposition. You've got to outlay a bit of money. That's the only issue.
You do, but at least you're buying an appreciating asset. One would argue.
Yeah,
right.
That's correct.
So it's future value.
It's buying an asset.
Yeah. Okay. So I think in terms of that side of the argument, that's well understood. And I can see that some companies it will allow them to have conversations with utilities a lot earlier than perhaps otherwise, and give them some runway to the production. If things go wrong, the utilities can go, okay, well, we've got about 6-9 months worth of wiggle room.
The other thing that's important is in your first production startup is usually when the costs are quite high. So if you've got a uranium asset base which you purchased at $30 a pound and your initial startup costs are at 45 or something, then your blended cost is a much better profile for your first 18 months, which is usually when there's a bit of heartache in commissioning the project. So it's not a bad strategy. So
has it surprised you at all how quickly these companies? I'm not talking about the UPCs or yellow cakes of this world. I'm talking the Denisons and UECs and others who have gone and bought in the market. They've seemed to have done it relatively quickly and relatively easy. Is that surprising?
I think it's
meant to be some sort of supply deficit.
No, not really.
Isn't it?
Well, not really. The thing is, there's a supply deficit when a utility puts out a request for a spot sale, a spot purchase, and they don't get any responses. At the moment, I understand people are putting out requests and they're still getting 3-4 responses. So therefore, you can't necessarily say there's a supply shortage until there's a shortage. So there's still some churn from previously purchased uranium from traders at $24, whatever, coming into the market, selling at 30, they're making their clip. Beautiful. So it's still a bit of a churn. Look, it's not surprising that people have jumped on. Look, back in the Toro days, we considered it as a board to purchase some uranium in stock as we went through the final approval process. At that time, uranium was climbing back through $60 a pound, so we decided, well, let's perhaps not do that. But it was a strategy that's been considered in the past by many companies, especially just before startup. So it doesn't surprise me, especially with the amount of information flow, rumour, scuttlebutt around the market that the price is likely to or has to move. It's looking more comfortably like a reasonable hedge on price and on cash. You're also finding, of course, that major institutions and significant high net worth shareholders are backing companies to buy it. So there is a message in the market that's broader as well. But I haven't been specifically surprised. We have, with our market-related people we talk to, we've had those discussions about some time ago. But yeah, it's been interesting to watch it. But look, fantastic. It's moved the price up, which is of course something that's drift back a little bit now, which shows you there's still supply. Which is something, I think something we called last week, which was, I think the price hasn't moved because we saw it as low as mid 27s a couple 2-3 weeks ago, and getting up to 31, fantastic. But you expect a reset because I think people take advantage of the fact that these companies seem very desperate to get a hold of it. But the other component to it is, not everyone's going to want to sell even at $31. If I'm sitting on pounds, maybe it's a better strategy for me to hold out until and not sell until it at least gets into the 40s, maybe even the 50s, depending on what your strategy is. But that then says to me, there's a lot of supply, there is a lot of product out there. So these utilities understand that. It's a question of when do they want to step into the breach, as it were, because they've got other budgetary
demands as well. So is it odd that they're not coming in and buying pounds now at $30 to you?
Well, it all depends on their inventory policy and their access to emergency inventory to some extent. So I recall in the heyday of very low price uranium times, if you can call that heyday, when it's $6, $7, $8, $10 a pound. The average US inventory was 18 months of uranium stock. Now, I don't think it's back down there yet. I think it's still at 2 or 3 years or something. I don't know, something like that. Not sure. So it may not be back down there in the emergency category just yet. By the same token, up until December, there was so much uncertainty in what they were able to buy as let's say the US utilities in particular as a buying group. Now that's been defined. You can have this much Russian material. The DOE is going to be out there buying, but they haven't come out with their tenders yet. So there's this certainty that's around there. And the buying seasons are traditionally February to May, just before summer, and then from about September to November. So we're in a buying season, if you like now. It sort of coincides with the refuelings, if you like. And so let's see what happens. There hasn't been a rush of RFPs, but I think there's been a few. There's two things. You've got to see how many RFPs come out. Then you've got to see, well, we don't know what people bid on those. Because if you're a trading group that's bought uranium at $23, $24 a pound, bang, doing a contract of 35 is making a lot of money. But it's on the path. And we shall see.
We shall see. We shall see. I suspect we shall see towards the end of the year in the second buying season. I suspect after things like the WNA and so forth. Well, look, Greg, look, I appreciate your time today. That's been one, lovely to hear your story and what you're doing in terms of how you're managing it. And two, obviously, as a very experienced uranium a miner, but also a buyer, I was intrigued to talk to you. So I appreciate your time today. Thank you.
No, thank you very much, Matthew. And it's been great talking with you. I enjoy your podcast and your communication with others, likewise in the industry. So it's great knowledge for us. Thank you very much.